by the chairman of the Shanghai Gold Exchange, and he said this in 2014, okay? And on May 15, 2014, the chairman of the Shanghai Gold Exchange said, the Shanghai Gold Exchange will change the current gold market with its consumed in the East, but priced in the West arrangement. And when China finally has the right to speak in the international gold market, the true price of gold will be revealed. All right, that's number one. Now, the only other thing I want to say, and I'll get your point or your comments on it, as to why this is all happening, right? Why is gold going higher as the public is not involved with positive real returns, with a strong dollar, with all of this stuff that is supposed to be horrible for gold, 5.5% interest on a short-term treasury, that should kill gold, right? No, because listen to this. And I think this is probably one of the most telling things I've ever heard come out of this BRICS formation. Now, I have been saying for a very long time, because Sergei Glaziev has said that the new BRICS settlement currency, whenever it's issued, and forget about the fact that it wasn't issued in August. I mean, what they're doing right now by trading in local currencies and settling in gold is just as damaging to the settlement status of the dollar and to the reserve status, because the settlement is done in local currencies, where Brazil will sell corn to China for yuan, and then they can convert that yuan into gold on the Shanghai Gold Exchange, and using gold to replace the excess reserves that would normally go into treasuries. That chips away at the reserve status of the dollar. So settlement in other currencies that was in dollars, and reserve status now in gold that used to be in treasuries. This is happening all over the BRICS, everywhere.
In this fascinating revelation from Andy Schectman, chairman of the Shanghai Gold Exchange in 2014, foretells a pivotal shift in the gold market. His prediction of a transition from an East-consumed, West-priced gold market is unfolding before our eyes. Schectman highlights the strategic move by BRICS nations, leveraging local currencies and gold for settlement, thus challenging the dominance of the US dollar. With the BRICS aiming to eliminate Western exchanges and control price formation, it's evident that a seismic economic shift is underway.
And the deeper you look, the more you see it. But, we've talked about the fact, and Sergei Glaziev told us 3 years ago, that there would be a basket of commodities and a basket of local currencies, those involved. And this was an article that came out in TASS, and it was by a man named Yuri Ushakov. And he says everything that we've already known, that the idea of the currency is there'll be two baskets, one basket of national currencies, the second basket are commodities, primarily gold. We've known that. Why else would gold be reclassified tier 1? Why else are the central banks buying the crap out of it and repatriating it? We've known all of that. He also said it will be a digital form, which means it can be used without the banking system. We've known that too. Think Project M-Bridge, which we just saw the first ever cross-border gold transaction using Project M-Bridge. It allows these countries to trade with one another in local digital currencies, sidestepping SWIFT. We've known all of that. None of that is new. But here's the crazy part, all right? And this is the part that I think people really need to understand. When they always say Chinese think in terms of decades, we think in terms of minutes and hours. Listen to this. He says the second part is price. He says, for the moment, price is determined by Western speculation. We produce these commodities, we consume them, but we do not have our own price mechanism, which will balance supply and demand. During the COVID panic, the price of oil fell to nearly zero. Now, we know it actually went to -40, so he's a little off on that, but who cares? Here's the cool part. It's impossible to make any strategic planning for economic development if you do not control the prices of basic commodities. Here it is. Price formation with this new currency will get rid of Western exchanges of commodities. So you hear what the head of the Shanghai Gold Exchange said a decade ago. When we have the right to really speak at the international table, the real price of gold will be known. And here they're telling you, we know what you're doing by suppressing the price, but we're going to use it against you like jiu-jitsu. We're going to use your leverage against you. We're going to do exchange for physical. We're going to drain the COMEX. We're going to take metal out of the ETFs. We're going to buy everything that's not nailed down. We're going to import 400 million ounces of silver. We're going to do all this stuff until no one is naive enough. No one is stupid enough to trust the Western paper price. And they know this, and they are using it against us. And when you hear someone come out and, in the Kremlin, come out and say this, everything to me becomes crystal clear. And I just think people need to understand that when the COMEX was designed and they were able to suppress these prices where people actually pretend to pay for it by just having money in a margin account. They don't even really pay anything for the gold that they control, as long as they have money in the margin account. And we pretend to give it to you because it's rehypothecated so much. Well, China and India and Russia, these countries were not wealthy enough, industrialized enough, or sophisticated enough to stand up to us. But now they are. And I think this is just beginning, Andy. I really, truly, truly, truly do. And when you hear them say that our new currency will get rid of the Western exchanges, well, think of the arbitrage we're seeing in China right now, where they turn up the price of gold and silver enough to suck everything over. And I don't know when that moment is, but I think we are getting closer and closer and closer. And I would argue that the reason the metals are moving is because they have substituted the risk, the confiscation and default risk and sanctioning risk of the West, the treasuries and the dollars, and the lack of prospect of being the petrodollar any longer. And they have switched to local currencies for settlement and to gold and oil and silver to be used as wealth. It's being remonetized. It's being used instead of the treasury. And I think it's just beginning.
Andy Schectman's analysis delves deeper into the geopolitical chess game unfolding before our eyes. He connects the dots between the BRICS nations' strategic maneuvers, the weakening of the US dollar's hegemony, and the escalating tensions between global powers. With insights gleaned from years of observing these trends, Schectman unveils the hypocrisy and short-sightedness of US policies, from executive orders to sanctions. As he articulates the shift away from treasuries to assets like gold and silver, it's clear that the stakes are high and the consequences far-reaching.
I think the reason that this is happening is, and a lot of the things that I've been talking about, you might be the only other person that I know of that was talking about these types of things 3-4 years ago, about the BRICS and the Belt Road and all of the tier one asset. I mean, I learned a lot of that from you, the revision of gold and the way the BIS revised it in terms of its tier one riskless portfolio or asset that, other than U.S. treasuries and dollars, and how profound that really has been. And if you follow this progression of events, my mentor, Andy, was a man named Richard Russell. I'm sure you remember him. And brilliant man. And he said the Fed was trapped way back when, 20 years ago. He was saying they can inflate or they can default. And now I've been saying for the last year or so that it seems too stupid to be stupid. The things that they're doing, almost as if it's intended. And you look at an executive order to go green. Well, that's stupid considering the linchpin of the hegemony is the petrodollar and the backing of the Saudi kingdom. The fact that Saudi Arabia signed an executive order with Russia, the fact that, a military protection agreement with Russia, the fact that Saudi Arabia has joined the BRICS, has joined the Belt Road along with all of the other OPEC countries, the fact that they've joined the New Development Bank and the Shanghai Cooperation Organization, the fact that, and again, all OPEC countries on the Belt Road, the fact that they have told the folks in Davos they're open to taking other currencies for oil, all of these things you could argue we have fostered by signing an executive order to go green, by weaponizing the dollar is a big one. And all of these countries, I believe, have crossed the bridge of, we don't want to hold treasuries anymore, because not only if you look at what gold has done over the past 25 years since the turn of the century, it's massively outperformed not only the S&P, which is average about 7-8% per year, and gold over 9%, but massively outperformed the bond market. But the real reason, it's not the performance, it's the fact that it can't be sanctioned, it can't be defaulted upon, and you don't have that default risk, that sanction risk that you do, where you have our brain dead Treasury Secretary going into Brazil few weeks ago, into the backyard of Russia, a member of BRICS, and saying, well, publicly in a conference in Brazil, we need to not just confiscate or sanction the 380 billion forex reserves, we need to confiscate them and use them to fund the Ukrainian effort. And now she just said it again 3 days ago in an interview on CNBC that says that, this is from the too stupid to be stupid category, that the U.S. is ready to sanction Chinese banks if they aid the Russian war machine. And she says is prepared to sanction the banks and companies as well as Beijing leadership if they aid in Russia's military invasion of Ukraine. So we can aid the Ukraine, but you can't aid your ally, your BRICS ally. If you do, we're going to sanction you. And now she's talking about sanctioning Iran again. And, we're a broke, hypocritical nation. And And then you look at what we've allowed to happen inside our borders, which I keep saying, if we just were as stupid as we were internationally by signing executive order to go green, by allowing our allies like the United Arab Emirates and Saudi Arabia to turn sides and to join a group that finds safety in numbers with 3 of the 4 largest nuclear arsenals on the planet, a much larger percentage of global GDP and human population, and oil and gas production and rare earth metal production, and even larger swath of soft commodities like wheat. And we allowed China to buy, without, we've watched and stood by as we've seen China buy the LME, and now they want to warehouse all of the LME metals, the London Metals Exchange, which is copper and steel and the base metals. They're going to warehouse them in China, even though they're traded in London. All of these things are happening at the same time. And you look at what Janet Yellen says, and she says, that we stand ready to act if we see significant violations, especially by financial institutions. But the most embarrassing part about it is she says China is entitled to have a relationship with Russia. Well, thank you very much, Janet. And she says that, noting that much of the trade between the two countries is seen by the U.S. as non-problematic. Well, that's fantastic. But the provision of military aid from Beijing to Moscow will trigger sanctions. And you look at that, and I don't know about you, but to me, I find it embarrassing. I mean, it's so hypocritical that it's actually embarrassing. And, I think this is why you're seeing these countries say, the hell with treasuries, which has a tiny little footprint in terms of historical significance as being an asset. The hell with them. We will buy something that not only has outperformed it, but can't be sanctioned. And let them try to manipulate it, because, Andrew, I think the only way you can manipulate a market over an extended period of time is to push it in the direction that it is going. But when you see China and India and all of these countries buying whatever is not nailed down, and now China raising the price of silver and gold in Shanghai, as much as $3 an ounce in silver to attract the arbitrage trade, you can see that this is something they think in terms of a much longer time frame than we do.
Today's discussion with Andy Schectman has shed light on the intricate dynamics shaping the global financial landscape, from the chairman of the Shanghai Gold Exchange's forecast of a paradigm shift in the gold market, to the strategic maneuvers of BRICS nations challenging the dominance of the US dollar. We've explored critical insights into geopolitical and economic shifts. Schectman's analysis reveals the interconnectedness of policies, currency movements, and the resurgence of gold as a safe haven asset. As we navigate these complex developments, it's crucial to stay informed and engaged. If you found today's discussion enlightening, don't forget to subscribe to our channel, like this video, and share your thoughts in the comments below.